My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends. I'm just trying to make some money. My job is not just to entertain, but to put this all in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Ooh, the market was cruising today, looking real good. Until the Fed press conference hit a retaining wall that triggered a wave of machine selling. With the Dow slipping 130 points at the close. You know, it was up 518 points, and then it fell 421. Crazy nut swing. While the S&P lost 0.15%, the NASDAQ only edged up 0.02%. Not bad there, huh, for the last guys. I mean, look at this. I mean, come on, it's getting really nutty out there. It was wacky. But it was ultimately a disappointing session for the bulls, who bought at the top and saw their hopes dashed once again. So did Fed Chief Jay Powell cause the sell-off? There are enough people who are afraid of stocks now that it's very, very easy to trigger a panic. But here's the truth about Jay Powell. He's smarter than his critics, and he knows how to do his job. He knows the economy's running too hot, and he needs to slow things down without causing a serious recession, something his critics seem to want. He's not trying to cater to the people who want easy money forever, or the inflationistas who want him to immediately hit us with a 50 basis point rate hike that would cripple the economy. You know what that's called? Prudence. The critics, especially those who don't care at all about how much our inflation is caused by COVID and supply chain disruptions, simply want someone to take a jackboot to the carotid artery of the market, and the economy. They want Powell to be judgmental, the opposite of prudence, and promise to raise interest rates repeatedly to stamp out inflation by strangling the very life out of business. Then there are the bulls who want permanently low rates because it's easier for them to make money. My takeaway, it's kind of like Aesop's fable. Please all, you please none. If you're a central banker, you're doing a pretty darn good job if you're making both the hawks and the doves angry, and this guy is. When it kills someone, anyone who comments on the Fed to give this terrific guy an attaboy, he's not some live-action drama. This is not Federal Reserve Season 2, Powell's back and he's bigger than ever. We're talking about a public servant who's very good at his job, which is a rarity in this day and age. Now, the people who sold this afternoon did so because they're worried the Fed's going to suck up all the liquidity while also accelerating inflation. Never mind that those actual claims are totally contradictory. They're afraid that the Fed won't dump its trillions of dollars in bonds fast enough. But the late afternoon rollover, though, the buyers, well, they were still there. They were there because the big bad event's finally behind us, and Powell didn't do anything that surprising, like hitting us with an immediate 50 basis point rate hike. He didn't do that. There just weren't enough buyers to staunch the bleeding from the aggressive sellers who came in with their machine guns and obliterated everything that had been going up on strong earnings. That was the dispiriting part of the session. The sellers, reacting to the much more hawkish Powell tone in the press conference compared to the dovish tone in the statement, ended up getting the last word. So, I mean, we could say, oh, boy, what a bad day. That just happened to be when the bell rang. So when it comes to stocks, not Jay Powell's style or demeanor, which side is correct, the bulls or the bears? Honestly, neither. If you're buying companies that make and sell valuable things for a nice profit and return some of those profits to shareholders, I think you're going to do just fine. If you're still buying companies that make no money but grow fast, you won't do fine at all because Powell's not on that team anymore. Now, the stocks of big companies went down too, but unlike the SPACs and the IPOs of the last year, I think they'll be able to bounce back once the S&P futures finish their butchery. Aha, you may ask, aren't companies doing badly already? Isn't Powell going to have to destroy the economy in order to stave off inflation? Regardless of what he said today, shouldn't we sell everything? Isn't that why we had a resumption of the same sell orders that pushed us lower on Monday and Tuesday, the moment Powell went off script and riffed about rate hikes? I think the answer actually is no. I want you to consider the following. We're now a couple of weeks into earnings season. Let's go over the scorecard. Right now, the major companies that have reported, we've seen a huge number of upside surprises, sustainable upside surprises. Doesn't mean their stocks can soar when there are high explosives coming at your way, hurled by the program howitzer sellers. But it will matter when the selling stops. Since earnings season began, we've had beat and raise quarters from Johnson & Johnson, American Express, Procter & Gamble, IBM, Texas Instruments, United Health, Microsoft, Verizon, Travelers, Raytheon, 3M, and Wells Fargo. Okay, we've had some downside surprise from Boeing. It's terrible. Netflix, all right, and, GE, at JP Morgan, which was really more of a taper tantrum thrown by a guy who runs the bank. So that's the actual rundown right there. Many more huge capitalization companies doing well than Bailey. That's it, okay? Now, you can say, so what, Jim? They're bad. The good ones do bad, and the bad ones do bad, and that's what happens when Powell speaks. Don't you see that, Jim? I mean, can't you see that's the future? No. I'm not so sure. I don't like to grade myself by where the sell programs went out. If you're investing for the long term in the kinds of solid companies I keep recommending, and that's these, then a lot of what caused the market to plummet was just inside baseball. The machines, and they were machines that just kept firing off sell order after sell order for bids could rise up. Well, they don't know anything about this list of upside surprises. They don't have any understanding that some companies are doing better than others because they just regard all companies as the same, as if they're like wheat or corn. All I know is that those sellers spoke last, though. Tomorrow, when we go back to evaluating individual companies, I think it'll be more of the same that we had of late. The world changed in November when Powell told you he'd be done stoking the economy. He's done. If your company can still make things and sell them at a profit in a rising interest rate environment, because rates really went up big today, don't let these high-speed sell programs scare you away from value. But if we get a bounce, and we should, because we have only been this oversold on that S&P oscillator that I like 4 times in 6 years. 4. And all but the COVID crash was a terrific buy opportunity. So if we get that bounce that I'm expecting, please relieve yourself of the SPACs and the recent IPOs and the junk, the hundreds and hundreds and hundreds of clunkers. As you'll see later in the show, despite the decline, we still couldn't find many that are worth buying, and there's so many that are worth selling. Here's the bottom line. Fed tightening cycles are bearish. The Fed is no longer your buddy pal friend. Jay Powell's not going to bail out you out of any crummy companies anymore with easy money. He's going to crush you if you're in these SPACs and these IPOs. The Fed put, it's dead. But that doesn't mean everything's bad. It merely means there are fewer ideas that are good. They still exist, though. You just have to know where to find them. Elliot in Illinois, please. Elliot!
Booyah, Jim. How you doing?
Booyah!
So, I got a question on a stock that a lot of people said was going to be a reopening play. I bought it in September of 21. It's been trading sideways since. I think it's all about profitability with this company. What do you think about Uber? Give me some good news, chill man.
Oh, the chill man be hurting here because that doesn't fit the new reality. That's a company that is a very good company, but it loses money. And I'm no longer inclined to recommend companies that lose money on the show because I want what I call viewers. And in Indiana. And
Jim, thanks for taking my call.
Okay, thank you.
Trying to figure out how to buy on a dip for a reason and not just buy on any old dip. Could you talk about that through the lens of Estee Lauder, which is...
What, you like, listen, were you in my morning meeting this morning with Jeff Marks?
Yeah.
We were sitting there saying, okay, what level? Because I want Estee Lauder so badly, because I think the word about Fabrizio Freda, and they're terrific coming in. And Jeff keeps saying, Jim, it's still too expensive. It's so expensive. It sells at 39 times earlier. And I keep saying, no, you got to buy, you got to buy. He said, no, not yet, not yet. We are in the throes of looking about where we first bought it, which is a little bit lower. You know, we sold it really high. We are on the verge of making the move in Estee Lauder, and that's what you got to do is be a member of the investing club. I cannot believe that you mentioned that stock. That was the one that we were going hammer and tongs today. So anyway, look, good ideas exist. There's just fewer of them. You got to know where to find them. But look at all these. Hey, you've heard of every one of these. Every one. Oh, man, money tonight. Wall Street has been an absolute roller coaster. So is it time to start putting some money to work? And where should you look? I'm doing some screening to try to find those smaller ones that you like, but I got to have profitable ones. I don't like those other ones anymore. Oh, by the way, in the SPACs, I know where you live. Anyway, I'm hunting for opportunity. I'm revealing a corner of the market that can help your portfolio compute futures. Qualtrics reported after the bell. I'm digging into the numbers with the company's top branch. You have to use a different kind of subscription accounting. It's actually profitable on that basis. But you know what? The SPACs, the IPOs, the Fed put, it's over. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.